If you are new to the stock market or you're among those who bought when the stocks were at their all-time highs, I know you're about giving up because of the current movement. Now, the market is red and everybody is aware of that, but people have given different reasons why the market is red. But we decide to actually keep ours till this point because we wanted to follow the market and be sure of the things we are about to say. So today we're talking about 5 reasons why we are in a bearish market now, and if this actually is the best time for you to buy. Now, my name is Providence. Welcome again to Clockwise. Now, my guest is here. He's always sleeping on the charts. So today he will be telling us what the charts are saying and also what the fundamentals of these companies are actually saying. Now, with a resounding virtual round of applause, welcome Mr. Kanem. Welcome to Clockwise.
Thank you very much for having me.
We are still in a bears market. Yeah, the bears are actually coming up every day. And we've had different reasons. People have given their own reasons. People have given their own insinuations. People have also given their own opinions why the market is actually red. Now, as an analyst, as an experienced analyst who have been in these markets for a very long time, you've seen this period, you've seen boom period. What do you think is affecting the market currently first?
Okay, so the bear market we're having now, or I really don't call it a bear market. I think it's a deep correction.
You've always said that.
Yes, it's a deep correction, though people will call it bear market. So the idea is when you, a 10% dip in the All-Share Index is what we call is a correction.
Okay.
But when it goes beyond to 20% and all of that, then you begin to talk about a bearish movement. So
it's not yet up to 20%.
It's not up to 20% yet. So
the list is still 10%.
We okay. So let's look at it this way. Before you say, let's do the math. 161 trillion. If you do the math and find out where we are currently, then you realize that we are almost there actually.
Okay.
But I mean, I believe this is it's you can even look at it as a bear market within a larger bull market.
Okay.
These are things that we are used to. So sometimes we could have, especially when stocks have risen so fast. So if you look at year to date, at the point we had up to 61% on the All-Share Index. Now that has corrected to about 45%. So it's you would say, okay, we have lost about 16% of gains. But one thing you should also realize,
16%, not
16%.
Yeah, 16%.
So up to 16% in gains.
Not 10%.
But one thing you should realize is that 45% is still a very, very decent number. That's what people don't consider. The reason why we're saying we are crying so much is because most people who hyped, who jumped into the market because of hype and bought close to the top are the ones that are all over social media, making a lot of noise. But I mean, for someone that's invested in at the beginning of this year and you're up about 45%,
you're still
in some stocks actually you will still up over 70% as a matter of fact.
You're still in profit.
That's a decent profit. You can't even get that from the S&P 500. You can't get that from NASDAQ or any other,
I think those people that actually bought at the all-time highs, they are the one actually.
So they are the ones that are actually feeling pains. People. That's why some of the things sometimes we say don't follow hype. Really, look at the strong fundamentals.
I think the bull market is not the best time to buy stocks.
The bull market is not the best time. That's why I'm saying we are in something that looks like a bear market, but people are afraid to buy. When I tell people you need to buy, people are not afraid to buy. In the next 3, 4, 5 months from now, you will look back and say, "What? I can't believe I saw when this was this." Let me give you an example so you think about this. I saw First Bank get to 50 naira per share and traded down to 3 naira per share and came back up to 60 naira, even more than 60 naira per share. That's how the market is. Yeah. The market moves in cycles. So here is the deal. We want to, it's important that people understand that this is a minor bear market or a bear market within the larger bull market. Okay. So let's look at some of the reasons why the market has actually corrected. Number one, I'm going to start with the most basic, is basic profit taking. Institutional investors, most especially, and I've said over and over again, are always, it's part of their management strategy, their portfolio, risk management, portfolio management strategy. When you invest in a stock and it gives you some gain. Sometimes and I do it myself. I even said
You said it on the show.
Sometimes I invested, so for example, put in some money in Micron. Micron is a US company. And because Micron ripped, Micron at a point did over 900 and something percent return. Sandex did, you ready? 4,000% return. You will know that even if I put just $10,000 in that would give you about 400,000. Because it did 40x. Now, you cannot sit on that in your portfolio. You can't sit possibly because that is dangerous. That actually increases what we call concentration risk. So what you rather do is you trim them. You trim these names to rebalance your portfolio as a professional portfolio manager. So, I mean, I think Zenith Bank at the time did almost 77% return on investment. So a sane institutional portfolio manager would always trim their positions. It would always trim their position in order to rebalance their portfolios. So what that means is, because these numbers have come in, because these performances have come in, investors have to trim, and that's what
I think the problem here is the mindset retail investors use in actually choosing these stocks, because institutional investors will not invest except they have a goal. And once they've achieved their goal, it's normal for you to actually sell
trim positions. Yeah.
But retail investors just buy because people
remember, retail investors, a number of them buy because of what they saw on social media. So even a stock has done 70% or 60%, someone would take a screenshot and post on the social media, everybody will jump in and want to buy. That's normal. I mean, greed. Two things influence the market: greed and fear. So greed means people will rush in to buy at that time, but that's usually not the best time to buy. So first is normal profit taking.
By institutional investors.
That's the first thing that actually led the market to correct. The second thing was the Dangote, whether you like it or not, the Dangote refinery private placement. Whether you like it or not, that could have happened at the institutional level. That was basically open to huge portfolio managers, high net worth individuals who trim their portfolio in order to gain exposure to Dangote refinery at in the private placement. That in itself could have, and by the way, you should know that the biggest guys in the people that actually move the price of stock are actually the big boys. Remember, up until recently, you needed about 100,000 units of stock to move the price. So the only people that can literally do that are the big guys. So Dangote private placement actually also introduced, and it is something I had said before now. I advised, especially people that followed, or maybe made a recommendation for people that followed on this channel to consider sitting on some cash or cash equivalent ahead of the Dangote IPO, because I knew that people will rotate. I think retail has not even rotated into Dangote. They have not. People are still sitting on the cash they have, something they can mobilize. But what I expect at some point, especially close to Dangote IPO, because I mean now ACC says, of course, they have not even done their S1 filing. So ACC is saying a pause on all the advertiser noise making around the Dangote refinery. So by the time the S1 filing is done, we have a date in mind. No, we are looking at, according to Dangote, he said September. But once we have a date in mind, then I mean momentum will start building, especially among retail investors, and then you see people starting to take profits on some of the names they've invested.
So we are expecting a more.
So we expect institutional retail investors to still take out something from the market.
Going down.
There are a mix of factors that would make to decide whether the market is going down or not. But around that time, it could be an opportunity for you to buy, because some of these very strong names, the Fugas, the strong institutional players, the telecoms and all of that, might suffer an unmerited dislocation simply because people want to have exposure to Dangote. So Dangote private placement was, in my opinion, one of the contributing factors. Like I said, the correction we're saying here is not just one factor. It is a collection of factors.
Okay.
Yes. And so when you understand that, it makes it very clear. Then the third one, so we've talked about profit taking, we've talked about Dangote IPO. Then the third one would be the fact that inflation ticked up.
Okay.
Yes, inflation ticked up, and I think May came in at 15.93.
And the bond market became
So because of that, remember, investors work by what we call inflation expectation.
Yeah.
So, and inflation expectation we now had the inflation expectation from, I think, IMF. They're looking at, I think, 16, an average of 16.9 by year end. That's more than, that's literally almost a 100 basis point from the last figure. So when that kind of inflation expectation comes out, investors try to price in the fact that the CBN, the MPC, the Monetary Policy Committee, might not lower rates through year end, and that fear actually trickles into the market. Okay. Remember, I have said it over and over again. When inflation runs high, investors begin to expect a hawkish tone from the Monetary Policy Committee, and so they believe that because of that expectation, it has a negative effect on equities. Okay. It has a very serious negative effect on equities. So the inflation expectation ticking up. Why is inflation ticking up? Because of the fact that we saw a lot of disturbance in the Middle East that affected the price of crude. Yeah. And of course, you know that Nigeria is a fuel-based economy. So of course that had a way of trickling into every other thing, both food and other things that people really buy. And of course, the headline inflation, we've seen an uptick. And then with the inflation expectation getting as high as 100 basis points, almost 100 basis points from where we are, that has left investors to begin to think that the MPC might be having such a hawkish tone down the line. So inflation was one of the reasons. And of course, the natural reaction is that they would want to trim rate. That's the third thing. The fourth thing is what has happened in the bond market. If you observe, if you look at the last two auctions that we've had, in fact, the government had actually looked at, or the DMO, the Debt Management Office, had actually looked at a 1 trillion naira offer, and they ended up doing 1.2 trillion. So what that means is that that oversubscription means that it tells you where investors are rotating out of equities into the bond market. And now that actually even took the price, the yield, the real yield, as high as 17.84. And then you also have the DMO also released its calendar for the month of July, for the month of August and September, meaning that on average, I think 1.4 trillion, that's what they are offering to the market over those 3 months. So that's their average. That meaning they are going to offer in the month of July, month of August, and month of September. So you know what that means? It tells investors that the government is very, very aggressive around borrowing. Okay. So and at the point we even saw institutional investors. I think about 10 billion came in, according to the reports we have. $10 billion came in. Guess what? 95% of that went into the fixed income market. 10 billion of foreign portfolio investment came in, but about 95% of them so that tells you where investors are looking at. And so, in fact, with that I think there was a time that figure went at almost 19%, because immediately the DMO released that schedule, it ticked up by 100 basis points to 18.4. When you have 18.4, that means the real yield is over 20. Now, you at a point it literally almost notched at 19.0. So taking the real yield to almost almost 21. So when you have that kind of so of course, like I think I said in the previous podcast, there's a price and yield have an inverse correlation. So when people now rushed in, of course the rates the yield had to come down. Okay. So the point is, what has been happening in the fixed income market is affecting because when the yield, I mean, let me ask you a question. If you can get 20% or even 19% from the fixed income but remember, this is zero risk. Why would you go to dabble into equities? So that is what has been bringing this downward pressure, a lot of downward pressure on equities. Have investors rotating out of equities into the fixed income market. That is the fourth reason. But one of the other reasons, which for me I think it is very predominant, is the migration, the movement from tier 2, T plus 1, T plus 2 to T plus 1. It's also been a very difficult thing because, I mean, maybe a lot of people might not understand why this is important to investors.
Especially foreign investors.
So before, before June, this year, Nigeria operated on a tier 2. In fact, as a matter of fact, before November, as at October of last year, we were doing T plus 3.
Yeah.
Now we moved in about roughly 6 months.
To T plus
we
2.
moved from I said before June we moved to T plus
3.
Before as of October last year we did T plus 3.
Yeah.
November we moved to T plus 2.
Yeah.
Now just 6 months later we are now moving to T plus 1.
Inconsistency.
Not really that. So what is happening is, remember, when you are saying trades should settle within one day.
24 hours.
Now, for local investors, that might not be such a big deal. But for foreign investors, that is a big deal. Remember, in local investors, I'm a local Nigerian, I hold Naira. So I can easily, as much as buy. It's a matter of dumping, moving funds to my brokerage account and then placing a buy. And that's what it is. Yeah. But the point is, when it comes to institutional, global or foreign institutional investors, it doesn't work that way. They have what we call global custodians. You have corresponding banks. You have local custodians that will have to. Let me paint how a trade happens. So a fund manager sees an asset he wants to buy. Let's say he wants to buy 2 billion naira worth of Zenith Bank. I'm giving an example. Yeah. Then he says, okay, remember, they always like to, so that they can get the most accurate price, just like I do. They always want to do close of market. Let's see where this price is at close of market. Because the reality is that a stock could be trading at 100 naira during the session. But at the close of market, because most of the trades actually settle at the close of market, you might have 95 naira or even 90 naira. So most investors always want to catch in at that close of market to see where the trades settle. Then he wants to buy. Watch this. Remember, it's T plus 1. When it was T plus 2, he has 2 days to complete that transaction. Yeah. And that transaction includes, he has to work with global custodians, because as a fund manager, you have your funds with custodians. Now, the global custodian has to, through corresponding banks, issue a directive to a corresponding bank. The corresponding bank will then fund the local bank, the local custodians. The local custodian will now go to the FX market. Remember, everything here is in US dollars. Yeah. The local custodian will go to the FX market and then change it to Nigerian naira. And then before the trades settle. Yeah. That is something that cannot work within. That will have a very in the current market infrastructure we have in country, 24. By the way, it is actually not even 24 hours because remember, because of the time zone. Remember that the trades close in Nigeria around 350. 350 is roughly 10:50 in New York, and especially in the U.S. West Coast, is about 7:50 a.m. People are literally waking up. Before institutional investors make a trade, they must actually, the portfolio managers, the risk management team, must complete their internal workflows before and a foreign portfolio manager makes or investor makes a trade. Yeah. So if you look at the time zone, the overlap is very tiny. It's literally less than 2 hours. So that means you don't even, before the portfolio manager, the custodians, the risk managers and all finish their internal workflows, banks would have closed. FX houses would have closed. So that makes it impossible. And that is the reason why FTSE Russell, that had actually said, okay,
I think it was suspended.
Not suspended, they are placing it on review.
Yeah.
So FTSE Russell was actually eager. Remember, we were taken out a couple of years ago because of FX issues and the challenge with repatriating funds. Now, given the stability, the relative stability of FX, FTSE, by the way, FTSE is Financial Times stock exchange. It actually tracks some of the biggest names, the biggest companies in the UK. So it's equivalent to what you have in the S&P 500. So in the US. So now the FTSE actually wanted to readmit Nigeria to their frontier market index. We have developed markets, we have emerging markets, then we have frontier markets, and then we have developing markets. So frontier markets is a bit above developing markets, but not yet into emerging markets. So now they wanted to bring Nigeria back by September, but now with the movement from T+2 to T+1, they have to reassess, because one of the things, in fact, the only way institutional foreign portfolio investors can still execute trade with the current infrastructure we have, market infrastructure we have in Nigeria, the only way foreign portfolio investors can still execute trade is by what we call pre-funding. Having a pre-funded account, what does it mean? It means that you have to institutional investors, foreign portfolio investors don't have to wait until they want to trade. They have to pre-fund their account. So they already have Naira sitting with their local custodians. And then so that when they want to execute trades, it can, remember, most of these trades actually close by 12 noon. That means you must submit by 9 a.m. So there are a lot of, the thing is, when you understand how these things work, you understand the challenges. So that will mean custodying, having your local custodian hold Naira. But there's a challenge there, currency depreciation, opportunity cost. Because when you are holding millions of dollars in Nigerian Naira, that means, what if Naira depreciates? You are losing, even without making any trade at all, you are losing value. Number two, opportunity cost. What that means is that you can, with the money in Nigeria, in Nigerian Naira, that means you cannot invest it elsewhere to make money. You are tied to investing in the Nigerian equity. The other thing is some risk too. Risk as in the form of, you are investing. Most investors always want to trade first before settling later. So there are a lot of disadvantages of pre-funding account. That's why FTSE believes it looks at pre-funded account or pre-funded requirements as a negative. They actually like T+1, definitely. Just like the US is doing T+1. Yes. But the point is, do we have the market infrastructure? We don't have the market infrastructure. And so because the FTSE has actually placed on review, a lot of institutional investors foreign investors are afraid of what we call failed trades, trade failures, and all of that. So they are beginning to do what? To pull back a little and observe what is happening. Their risk teams are observing what is happening. So that is exactly the challenge. That is why when you have, the NGX is dominated by local investors. But remember, local investors always want to look at what the foreign investors are looking at. They believe that foreign investors have some information which they may not have access to. So when these foreign portfolio investors pull out, then it sends a signal to the local guys to readjust. So it's one of those things that makes. And remember, we have been talking about depth of market. In Nigeria is currently at 35%. If you look at it, so that's still very low. If you look at, some other markets, even in Africa, are as high as 60%, 70%. So when you have any opportunity, remember, why did we extend the trading window from 2 p.m. to 3:50? It was because we wanted to have that overlap with some other demographics, so that we can have institutional investors from there to participate in the market. Now, this T+1 is effectively, because of the infrastructure we have, is effectively shutting out these guys. Because these guys, from the current market infrastructure we have, and FX conversion challenges we have, it will be difficult for them to execute a trade within 24 hours. So these are the 5 reasons why combined why the market has actually gone
from
down.
what you've actually said, are we actually expecting a respite? Like, are we going to see something?
So very quickly,
especially when Dangote list.
So very quickly, we expect something. But what we need, what does the market need now? The market just needs a guidance from the authorities. Okay, are you guys working? Are you having conversations with FTSE Russell?
Okay.
Yes. Trying to tell, okay, these are some of the things we are putting in place to ensure that we address some of the challenges, these issues that you are mentioning, because pre-funded account is a negative to FTSE Russell. They are most likely not going to bring Nigeria back if the Nigeria market demands, the setup demands a pre-funded account. So that conversation is necessary. Remember, investors work by guidance, not even by what is on ground. Yeah. So if that conversation is there, then they can have a glimmer of hope. That's number one. Number 2, in as much as this is happening, remember, in the next 2 weeks, half-year performances of companies will begin to trickle in. This is going to be a glimmer of hope, because if you look at some of the names, Zenith Bank, MTN, Aradel, even Aradel, some of these names did very well in their Q1, and I expect them to do very well in their Q2, and that which will make their half-year performance to be very good. That will spur some interest in the market. So that's why I would say, even though the market is down, it's a good time to buy, because by the time these numbers start coming out, investors will jump back into the market.
It must be wrong.
Yes. And remember, another thing you should also keep in mind is that, remember, the price of oil has come down. In fact, it has come down to pre-conflict levels. You know what that means? It means that the price of fuel will come down. If the price of fuel comes down, what will happen? Then the inflationary pressure will come down. So you might even be surprised that in their next meeting, the MPC might give a guidance of a possible rate cut. Once that happens, guess what? The bond market will do what? The interest rate, the rates will go down. And when it goes down, institutional investors, they rotate back from the bond market to fixed income to equity. So that will be it will be a case of, I should have jumped. A few weeks ago, I should have jumped into the market. So we are saying, you can start now. This is like we are like turning the trough, if you ask me. So it could be an opportunity for you to really
but you don't have to actually put in your own.
You don't want to put in everything, of course. We're still having a few things. By August, FTSE Russell will actually talk to us, make that decision whether they were going to admit us by September. So you don't have to wait till that. Like I told you, a few catalysts, a few tailwinds are coming in that can push the price up. So you want to allocate at this point.
All right. Thank you very much for actually taking time to explain this. We've actually seen a concrete, in-depth analysis of it. Thank you very much.
You're welcome.
Thank you very much. Now, on that note, we'll come to the end of today's episode of Clockwise. Now, do not forget to like, subscribe, and also put a notification bell on this channel because of the amazing content. And also, if you want to join our community, our Telegram community, we have a Telegram link on our profile. If you go to our profile page now, you see a Telegram community link. You can use that link to join our community, and let's have a very close interaction or anything you want to ask. Also, if you want to ask anything about this particular show, you can actually ask at the comment section, and we'll be there to respond to you. Now, thank you very much. My name is Providence, and I will see you again.